Hello everyone, JD Asajan with my brother, business partner, and all-around good guy, Paul Asajan here on another episode of FortuneBuilders.tv. Today we have a special topic that we're going to be talking about, and you know what? I'm going to let Paul take the reins of the show today and introduce what we're going to talk about and take you through to the end of the show. Paul, see you later.
Bye. All right guys, check it out. Here's the topic for today. I get this question asked a lot, and it's all about basically our different investment options and financial choices that we have, period, as investors, as people deciding where do we put our money. So the topic is, what are the different investments available to us, period, and how do they compare against real estate? That's the topic, okay? So real estate investments compared to all others. Here we go. Now, I'm gonna go into financial mode here. See that? Makes me smarter. First topic is bonds. Now, bonds, for those of you that know or don't know, is very simple. Bonds are a fixed return. They're not high margins. They're relatively safe depending on what grade bond you invest in. But let's just run through the stats here. They're fixed and a known income stream. They're efficient markets. So the bond market is a very efficient market, which means there's a lot of buyers and there's a lot of sellers, so it works very efficiently. Okay? We'll get back to that topic a little later. The tax advantages are there for what we call munis, which are government-issued bonds. So that if you get a government-issued bond, which there's a lot of opportunities for, you have tax benefits of not paying taxes on the interest that you make. Okay, very good point. However, with bonds, there's no leverage opportunities. That's a negative. And there's basically no additional growth aspects. When you invest in a bond, you know that rate of return, it's being stated, and then you're waiting for it to come back, okay? That's it. Unlike real estate where, hey, you could make a lot more, you could also make a lot less, right? The income is rather than capital gain or growth oriented. So again, it's bringing in income as opposed to having an asset that's gonna grow over time for an indefinite process. Okay, so bonds, done. Second one is trust deeds. Trust deeds. So trust deeds are when you buy other people's position or positions in real property that basically, again, there's an ability for you to get paid off with and doing it very passively from someone else when that transaction takes place. So let's just talk about the pluses and minuses. Trust deeds, there's fixed and known income streams. Okay, so again, when you invest in a trust deed, you know the value of the trust deed you're investing in and the timeline and the return that's going to come back to you. You can calculate all that, okay? It's an inefficient market. Now, again, that's a positive thing for an investor standpoint because inefficiencies allow us to make money because not everybody knows all the variables all the time. Same thing with real estate. There are no tax advantages. There's limited leverage opportunities, and there's no growth potential. When you buy a trust deed, right? When you buy someone else's note or mortgage, if you will, and it's secured by a real property in a certain position, the terms are already set. That's it. Again, on this one, the income, it's an income-oriented investment. There is no capital gains. There is no potential for your trust deed to appreciate to, some unknown 10, 20, 30, 40% return like we have in real estate, okay? Third one is stocks. Stocks, here we go. Obviously, I'm not going to talk too much of a definition. It's pretty clear. A stock is owning a percentage of a part of a company. That's what stocks are, right? So it's a less predictable income stream. You have no idea what a stock of a company will do. If I invest in Google, I don't know if it's going to zoom up or zoom down that given month, year, or 5-year span. So it's less predictable. The variable market has some efficiency. It's actually pretty efficient, the market, depending on what size businesses you invest in and stocks you own. But for the most part, traded on the S&P or NASDAQ, those are pretty efficient markets. So you can buy and sell those, so they're quite liquid. There are no tax advantages when you just straight away buy stocks. Now, if you buy them in a Roth IRA or a IRA in general, 401k, SEP, there are different advantages, but we're not going to cover that. There's a lot of growth, and that allows for a huge potential upside. It also allows for potentially, no upside because it's variable. We just don't know. And on this one, we're not looking for income as much as we're looking for capital gain and growth of an asset over time, okay? So there's stocks. Real estate. Now we're getting down to, obviously what we know and love and comparing it against everything we just talked about. So let's talk about real estate. It's a reasonably predictable income stream, meaning if you buy a rental, you can reasonably predict that income. Also, quite honestly, right, if you buy a house that you're going to buy, fix, and sell, and you know your numbers and you have your facts and information and you're using our system, you have a very good idea of what you're potentially going to make, okay? So there is a predictability in the income. It's a inefficient market, so meaning there's a lot of information that's always going to be unknown when you buy a piece of real estate. So as real estate investors, we get paid the big bucks because there's always going to be a certain amount of unknown information that we take a risk on. There's substantial tax advantages, whether you are living and owning in a home, whether you're buying a piece of real estate as an investment property. Interest income, sometimes, depending on what you own, is deductible. Depreciation of the asset against land in the building is a write-off, and there's many other tax advantages to owning real estate. So that's huge. There's huge leverage opportunities. The one thing I love about real estate is what other investment can you put down 10% and own 90% of a $1 million asset, $500,000 asset, $300,000 asset? Well, that's real estate. So the leverage opportunity is really what creates wealth so quick and so fast for the smart investor. There's large and medium-sized investments, which, again, depending on what market you're at and where you want to buy and hold or buy and sell properties, different price points of entry. They're illiquid, meaning you can't just say, I want to sell my piece of real estate and have cash now. There will be a process. So if you have money and you want to have it liquid, you probably shouldn't put it in real estate. And then more than anything, investing in real estate is a capital asset that you want to see grow and improve. Again, with apartments and rentals, there's a cash flow aspect, but some of your speculated growth is going to come from appreciation over time if you're not investing in a rental or an apartment building. So those are our big options. Obviously, there's a million different investments to do, but I just wanted to kind of share some of the different opportunities. Bonds are a smart play if you want a known return and a very low risk environment. Stocks are a great play. And again, bonds, you spend no time and energy. You buy it, wait, it pays you. Stocks are a great play, again, if you have no time or energy and you're doing something else and you want the upside of the capital markets, right? You want a huge upside, but you're also exposed to a potential downside. Trust deeds are a safe play. They fit, confined terms because that's how you're buying them. They're secured against real property, so that lowers the risk on that investment. And then, of course, there's real estate, which there's pluses and minuses to real estate. What I can tell you is doing real estate the right way with the right information and the right systems is always going to be a very good option for your investing career.
Deal or no deal?
Deal or no deal? Okay, on this episode of Deal or No Deal, I actually want to present you with a question off of the 4 investment vehicles I just shared with you, okay? Stocks, bonds, trust deeds, and real estate. Let's take someone who's has a lot of time, limited money, and they want to make a lot of money in a short period of time using the resources they have. And what are the resources? It's not a lot of money. It is a lot of time, and basically what they got is their energy and excitement to create. And when I say a lot of money, I'm saying they want to create $200,000, $250,000, $500,000 in a year, okay? What is the investment vehicle that basically would be the right fit for that individual? Well, think about it. It's not bonds, right? That has a time horizon, right? You invest in a bond and it's a certain time of maturity and they're low interest rates. It's not trust deeds. There's no big upside to buying and selling trust deeds and notes and mortgages. And stocks, you really don't have, you have time. So you're buying stocks, the time that you have available does not affect what a stock does. So where is the one place that you get to affect your rate of return, and depending on how hard you want to work and how much money you want to make, you get to influence it? You guessed it, real estate. All of those vehicles that we talked about have a time and place in your financial life and your financial portfolio. But what I can tell you with certainty, because I'm a product of it, there is only one that allows you to create great wealth in a short period of time so you can then do and decide whatever the heck you want, time-wise, financially-wise. Real estate's the deal.
Quote of the week.
Quote of the week. Now the quote of the week comes from Uncle Mike. Actually not my Uncle Mike, just a Uncle Mike. Okay? And I have to go into Uncle Mike's voice when I say it. Here we go. Count your pennies and your dollars will grow. Very simple. If you watch where your money goes and you are educated on the decisions you make and know why you're doing them, but most importantly, you count your pennies and pay attention to it, you will build wealth over time. That's all there is to it. What we talked about today is there's a lot of vehicles that we can have our wealth sit, create wealth, and manage our funds and wealth once we get it. Pay attention, get educated, get the right team around you, get the right resources, and most importantly, count your pennies and your dollars will grow.